Hello everyone, happy Monday. I hope you all had a great weekend. My name's Craig Erlam, Senior Market Analyst at OANDA, and welcome to today's Market Snapshot. We'll start as always with a quick check of the markets, and so far today it has been a relatively slow start despite the fact that we have had a large amount of economic data already throughout the session. I think the most notable thing to touch on today is the fact that we have seen a stabilisation in the dollar, which is currently up around 0.22% on the day. We did see a big sell-off in the dollar on Friday on the back of those very weak GDP, that very weak GDP reading. We were expecting growth in the second quarter of 2.6% annualized. It actually only rose by 1.2%. I think what compounded this disappointment was the fact that growth in the first quarter was also very weak. So the fact that we've had two consecutive quarters of slowing growth isn't really something that's going to make people too optimistic. I think also on top of this was the fact that part of what drove this lower growth was the fact that we did see business spending actually fall in the second quarter, so that doesn't really bode well for the coming quarters, potentially suggesting that businesses do foresee some form of slowdown, which is why they are starting to spend a little less compared to what they have done previously. So a little bit worrying here, but we are seeing the dollar stabilising a little bit today. In terms of market moving stories today, we've had a lot of economic data. It doesn't really seem to have driven markets that much. We're seeing quite mixed markets in Europe currently. US futures pointing to a very marginally positive open, but that could all change over the next few hours. The data itself has actually been quite a mixed bag. We'll actually look to that now. The data itself has been a mixed bag. We had the Chinese and Japanese manufacturing data overnight. And like I say, the official Chinese manufacturing PMI slipped slightly to 49.9, but importantly into contraction territory. Worth noting that this figure is the official reading, and it covers primarily large state-owned manufacturing firms, which tend to be more influenced when we do see big stimulus from the Chinese central bank and the Chinese authorities as well. The Caixin manufacturing PMI, which primarily covers small to medium-sized private businesses, actually rose to 50.6. So this again is the start of this kind of mixed bag of data. It seems previous stimulus efforts finally filtering through down to the small to medium-sized businesses, whereas the larger businesses potentially seeing a bit of a contraction here. But again, this is only one figure for each of these. What we need to see is a trend forming, and that isn't something which we're going to get from 1 month's piece of data. The non-manufacturing PMI, though, I think is notable. We are seeing more of a reliance on the services sector in China. So the fact that while we are seeing difficulties in the manufacturing sector, the fact that the services sector is now the largest driver of GDP in China, the fact that we're seeing this pick up to 53.9, I do think is a positive. In Japan, we saw some of the same old problems, really. Another contraction figure. We did see a slight improvement, but the concerning thing here was the fact that new export orders did actually fall to fall at the fastest pace for more than 3.5 years. This is significant. I think this appears to be largely driven by the strength of the Japanese yen, and given that we're not seeing that easing up, and the most recent stimulus measures that we had last week did nothing to weaken the Japanese yen, people very unconvinced by these measures from a currency perspective. Unless we see some form of intervention here or some more significant stimulus from the Bank of Japan in the coming months, then we could continue to see difficulties here in terms of Japanese exports, especially at a time when we are seeing global growth concerns and potentially slow down in China as well, which is a big export market for Japan. And we are also seeing a weakening of the Chinese currency as well, which could be influencing the amount of trade which we're actually seeing between the two countries. The PMI readings for Europe, most of which were revisions. We didn't see too much going on here from the Euro area perspective. The Eurozone PMI revised marginally higher off the back of that marginal revision in Germany, but largely in line with what we were expecting. The UK PMI was actually much worse than we were expecting, and more in line with what we saw in the services sector. This strong knee-jerk reaction to that Brexit vote, really showing a lot of pessimism now amongst the manufacturing and services firms. Like I say, this is just a knee-jerk reaction. Now, it'll be interesting to see what happens in the next couple of months, whether we start to see this move back towards or above 50, or whether we actually see this pessimism remain amongst these firms, because the outlook for the UK economy is so clouded. Going into this afternoon, the focus is going to remain on the manufacturing PMI data. We've got ISM and official manufacturing PMI data to come from the US. large around 53 it looks like we're expecting from both of them, which suggests that so far the manufacturing firms are not being deterred by the Brexit vote, and maybe this is an indication of the fact that the US is relatively separated from the UK and Europe. It's also quite insular as an economy, so they are driven by more what's going on domestically than abroad. But it'll be interesting to see again how that materialises over the next few months. One other thing I just wanted to touch on today was the fact that we did hear from William Dudley, one of the permanent voters on the FOMC committee. He kind of gave a mixed argument in terms of interest rates. He said he does think the market does need to remain open to the potential for a rate hike this year. He does still seem to be of the belief that there will be one this year, which most probably points to December. He did continue to highlight the number of risks though to the US economic outlook, and even things like the US presidential election he pointed to, which is again why people are going to be looking more towards December. But also, of course, he did touch on Brexit and the impact that this could have as well. So a bit of a mixture from William Dudley here. But I think it's very important to stress that he did say that an interest rate hike this year is still possible, something that the markets just don't seem to be keen on the idea of. Looking towards the rest of the week now, there is going to be a focus on the UK and the US. We've got the Bank of England decision on Thursday. Again, we're expecting the Bank of England to announce some form of monetary easing. That was expected last month, but they decided to hold off and wait to see, get more data effectively to see what the correct response should be. Markets are now expecting the decision to come this month. It's not really known at this stage what it is that they'll go for. Will they go for an interest rate cut, maybe even back towards zero, maybe with some form of quantitative easing, or are they going to look more towards the credit channels to look at the funding for lending scheme, try and stimulate some lending in the UK to offset what could be a bit of a slowdown in growth as a result of the Brexit moves. Of course, the problem with this is you can try and provide incentive for banks to lend, but you're not necessarily at the same time providing an incentive for people to borrow. If businesses think that the economic outlook is weaker, and if consumers think it's weaker, then they're less likely to borrow. So it will be interesting to see exactly what the Bank of England does have prepared for Thursday. And the other one, like I say, is the US jobs report on Friday. Again, a key economic indicator, especially given the fact that we're coming off the back of that weaker GDP figure for the second quarter. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.